Well, how can a tax reform package affect the housing industry? Let's bring in Mitch Roschelle. He's a partner at PwC and a business development leader. Hey, Mitch, good morning.
Good morning. I'm a white wine guy, by the way.
Yeah, I kind of am. I'm with you on that one. So, there's all this buzz, positive buzz in boardrooms across the country about this tax package, tax cuts. But you're saying that some industries are actually worried about what this tax plan could do to business.
Yeah, actually, the multifamily housing industry is very worried about it. And not to get too technical, but there are a lot of tax benefits that they worry about losing, like kind exchanges are in play. They're also worried about the pass-through rate because most apartments are owned by pass-through entities. They're worrying that the pass-through rate, when the rules come out, may not apply to them. So they're a little worried about what the tax reform package, for which we still don't have a lot of details, mind you, how it may impact their industry.
Because I would think, especially for landlords, or that they would actually be, the pass-through rate being lower would be good for them.
Yeah, the challenge is that there are so many entities that use pass-throughs. It's very, very common. In fact, about 40% of the taxes that are paid by business are paid by either pass-through entities or sole proprietorship. So when the rule comes out, let's say they land on the 25% rate, the Treasury has to actually write regulations to prevent abuse of the new favorable tax rate. And they're worried, the industry's worried, and I guess they're lobbying early. They're worried that some of the rules could apply to them and thus take away that benefit, meaning they'd actually be taxed at a higher rate.
That's really interesting. So we'll have to kind of wait and see what the bill actually says. Now, what about the home builders, like your Lennar, your Toll Brothers, these guys? I know that, and I've heard this voice before, there's concern that now because they're doubling the standard deductions, there's going to be less incentive for Americans to itemize, and that means less incentive to buy a home. If you're not itemizing your tax return, you're not worried about that mortgage interest deduction.
Yeah, Cheryl, there's a ton of studies out there about that, and they yield a whole bunch of different conclusions. The reality is that the home mortgage deduction is not going away. It's just going to be swept into a doubled standard deduction, which could be up to $24,000 for a couple married filing joint. But the real issue is, I would think, the deductibility of state and local taxes, of which property taxes are included. So high tax states like New York, if you lose that benefit, that could be a bigger challenge. California. So but again, state and local taxes are also still in place. So there's a lot of worrying going on when we really don't have the specifics.
Yeah, there you go. New York, New Jersey, even Massachusetts, California. That's a really great point. Let's talk about the oil and gas industry, because there's also some concern from leaders in that industry about what this tax package could look like.
Yeah, again, on a lot of in oil and gas, it's the pass-through issue all over again. Because the pipeline industries and a lot of the businesses that transport oil and gas and even exploration, they do use pass-throughs like LLCs to get tax benefits under the existing law. And they're worried how those rules are going to play out for them. So, again, uncertainty is yielding anxiety. And that's what you're seeing in a lot of the lobbying that's going on, as well as some of the press.
And some of these very, very popular deductions, which is the mortgage interest, which for high tax states, state and local, well, the devil's going to be in the details, literally, Mitch.
Absolutely. The devil is in the details.
Yeah, all right. Mitch, thanks for being up early with us this morning. We appreciate it as always.
Anytime. Thanks, Cheryl.
Good to see you.